Hello traders, I hope you're doing well wherever you are. Today is Sunday, 26th of May. And on the weekends, either Saturday or Sunday, what I normally do is that I go back to the past 5 days and I take a look at my trades to see if I've done my trades at the best spot or not, have I followed my checklist, or what I could do better for the next week to have a better chances, lower drawdowns, and better entry points. So let's take a look. What I have at the chart now, there are 4 moving averages. I normally trade in a 1-minute chart or 5-minute if I'm on the Euro USD or some currency pairs that move very slow. This is gold, it moves very fast. The pip size are very big, so I normally trade at a 1-minute chart whenever I trade gold. But I normally go, because we are doing a fractal trading, so we are doing different fractals. And as I've always said, price and the price chart is a fractal. No matter how many time frames you go up, no matter how many time frames you go down, you see the same pattern, and that's the basic foundation of the fractals. So on a 1-hour chart, let's take a look. This is like a last day, Friday, and then we go back all the way up to here. This is 20th, if you can see at the bottom here, and on this side is 17th. So this is the first day of the week, past week. So I put a line here just to show you where the week starts. The week starts here. So the week before that, we had an uptrend that's been going on for the past 3 weeks, 4 weeks probably. But in this week, we topped up and then market crashed. Let me grab my pen. See, that's from here, the market started, went up, and then it started to go down, trickle down, and it stopped at this very important area. What we want to do is that what we could do exactly to find the best spot. Now, in 1-hour chart, I have 4 moving averages. One is 240, because I trade on a 1-minute chart. I like to see the 4-hour chart, which is 240 candles. So I put the 240. This is 240, you see. Then I want to see 1-hour chart, which is 60. This is moving average 60. And then, this here, this one is 30, which is 30-minute time frame. And this one is 15, MA15. At the moment, I'm on a 1-hour chart, but if I go to the 1-minute chart, these are gonna represent the 4 higher fractals for me, the 4 higher time frames: 15-minute time frame, 30-minute, 1 hour, and 4 hours. So as long as I can see the 4 higher time frames, I can put a very good trade in the 1-minute chart. But I have to have a general idea of what market is going. The higher time frames, the bigger movements are very important. In a fractal, I have to know that what part of the higher time frame fractal I'm trading. Is an uptrend or is a downtrend? Market is moving fast or no? Market is in a sideways market. So, because you see here, in the previous like 2-3 months, I've have this resistance here. You see this area? And these 2 highs show that, okay, it's gonna be a resistance somewhere, and it's gonna top up. So the market's not gonna go higher. Maybe it goes. I'm not saying it doesn't, because in the future I can't see. But I have an expectation that the market's gonna slow down a little bit, plays around this area, you know. Let me do this. Like, plays around this area up and down. If it breaks up, good. If it breaks down, then I know what I should do. The expectation. You must have that in mind. Now, we're going to the lower time frames. This is 1 hour. We'll go to 30-minute. At 30-minute, you can see the bottom of the market was here. From down here, the market has started to move up. So I put a line here to show where the start of the previous trend was. Then I start to draw some trend lines and highs and lows and resistance lines, something like that. Now, The most important thing in fractal trading and fractal analysis: highs and lows, support and resistance lines, and trend lines. You need these three concepts. That's it. There's nothing else. So I start connecting highs and lows. See, these are highs and lows from here. Just a random thing, you know. This is based on every trader's eye. You know, everyone sees market differently. Some see it very detailed. I see it as a kind of a general thing. So you connect highs and lows based on what you think the highs and lows are. So when I come to the next week, which is the current week here, the market already broken this high, this resistance from before, and came back down on the first day. This is Monday. So I have some highs and lows. The next thing I do is that I start to connect them for drawing some trend lines. These two bottoms here are a double bottom. So I start from the second one. I connect to the, you see there, that's why we need highs and lows. Connect them. So you connect the first low to the next low, and then you draw a continual line. We have another one here. So we draw another one, it can be here or can be there, to the next one, and we continue it. The third one, these are called fan lines, you know. The third one is here, and then done. We don't have any more else. There's no high, okay? The last high had this low before that, and that's the only thing that we have connecting two lows. So we have three trend lines. The market started to play around above the highest fan line, highest trend line, and then it broke it midweek, and then it started to trickle down and the falling, you know, broken all these three lines at the end of the week. Now we come to the Monday, we have highs and lows. We see that every moving average that we have, price is above that. So I don't know if you can see it or not. I have these vertical lines, dotted lines. The blue one is the start of the London market. The green one is the start of the New York market. So when I come to the market at the time that I start trade, it's about an hour, maybe 2 hours before starting the London market. So I'm at this area. So I see these two top lines. Again, when I go down, now I'm on a 5-minute chart. This leg is an uptrend. I start to do the same thing, you know, with fractal trading, we do the same thing in the lower time frames. So let's connect highs and lows again. The beginning of the trend is down here. Again, we have a double bottom kind of down here, and then this market starts to go up. So we determine the highs and lows, and then we start connecting highs and lows. You can go up. You can go up to here because this is 5 minutes, and the market kind of slows down here. This is the next day. That's the start of the week here. That was the Friday the Friday before this week. So you can do these kind of thing, or you can do one connection and then continue all the way up. That's the highest high we have. That's Monday after the London session opens. Then we start to go down. You can connect all these highs and lows. And the market crashes down to this major support here. It hits back this, and then you have some there. The highs and lows. It cannot go high. You see, at this area, it cannot hit the previous high. When the price doesn't have the strength to conquer, to hit the previous high, we know that it's gonna slow down. It's not a confirmation that this market is gonna crash, but we have a kind of an idea, okay, the market didn't have that much power. So the market crashed again. You keep connecting these, okay? Now let's draw some trend lines. These two bottoms here are double bottom. We connect the first low to the second low and we keep going. You see the market comes to this low, to this trend line here, makes the major low. We do another one. From the last one, we connect again to this low here, and we keep going. Very easily you can see that where the price breaks the trend line and comes back down to the previous trend line, goes up, breaks it again, and if you continue these lines, you can see where the price tries to hit the previous trend line, but it couldn't, and then it crashed to the previous one, and then again, and these are the three big ones from the previous time frame. See, every time it breaks, comes back to it. Every time it breaks, it comes back up. Same thing here. These are the very important places to look for an entry. Now, we are in a 5-minute time frame. This is the Monday. Okay, this area between these highs, these are Monday. So at the opening of the London session, we try to look for a position, either buy or sell. You can do it in any way, because in 1 minute market moves everywhere. So, but our general sense is that the market is going to go down. We go to the 1 minute. That's Monday. You see, all this is Monday. So again, we have highs and lows. We connected through 5-minute time frame, and we try to draw some support line and the resistance lines. The first one to the second one goes like that. Oh, market broke it and it went higher. We do it again. First one, second one, third one. You can do one here, one there, and one down here. But because these three lows are very close, we can do one to cover all of them almost. And as you can see, the market breaks it after the London opens and goes up, back up when the New York opens. And then, yeah, we have this sideways kind of triangle here. When I'm at the market, I'm at this area. So I try to draw some support line and resistance lines. Where do you draw these lines? At the highs and lows that you determined in the previous step. This is the high here. I continue this all the way. So you can go all the way. The market hasn't formed here because you're in the London session. But you can just draw it up to here. Let's see what the price does. Another support line, you see, you connect these highs. It's a triangle here. And these lows, you can connect this low to that one and then keep going. Let me draw with another line so you can see it. All right, this is the low of the market. I connect the previous high to the low, and then market keeps going, keeps coming back to this line until it breaks it at the end of the day. Now, because I'm at this area, this is the London opening. I'm at this part. I'm gonna trade this area. Probably an hour, 2 hours before the London opens, maybe a couple of hours, 3-4 hours after the market opens. That's my spot. So you have to look first, you have to determine what part of the market you want to trade. Then you have to look for your trade setup at those time frames. Do not go 24 hours checking all the signals. That's not your spot. You must determine where. I know I'm at 2 hours before the London open, up to like 4 or 5 hours until the New York opens. I don't, gold in the New York market is very aggressively moves, so I don't trade in the New York session. So before the New York opens, I normally stop trading. Okay, now I have these highs and this support line, kind of a resistance line here. So I wait until this breaks and I get a pullback. Whatever pullback I get, I can trade it. I use moving averages a lot, but if you don't see that pullback, or maybe you like to add some indicators, I'm gonna add the default indicator, one moving average. Let's put the same 12, 26, and 9. That's one. And then probably an stochastic gonna be good for fast entry. Where is the stochastic? as RSI. It doesn't have a stochastic here. Okay, I use this one. Okay, here's stochastics. Let's say 533. Yes, good. Okay, everything is default. Okay, I have a default MACD, default stochastic. Let me zoom out. Zoom. Oh, yeah. Okay, now we can see exactly. All these highs and lows shows that the market is kind of getting ready, getting more energy to break some levels. If this line is your support line or resistance line, whenever it breaks and comes back to it, you want to start trading. If this purple line is your support and resistance line and you wait until the price breaks it, comes back, breaks it, comes back. You know, all these pullbacks you can trade, but you need confirmation from your indicators. So if I want to trade the first line, which is this top of the triangle, I'm gonna wait for a pullback after the break. The first one is very important, which is here. The price breaks it and comes back. At this area, the exactly where it is, I have to check my indicators. You see the signal in stochastic is down under the 20, and my MACD, which is a confirmation, is above the 0 line. So it's in a positive area. So I get this low here. At this low, I enter the market. Now, how much the market's gonna move? I decide that by 50%. I have a rule of 50%. So let me mark this area, which is gonna be down here. So I measure from the top to bottom. I put a line. And what I wanna see is that the last high before the break, which is here. I want to see the price getting close to this line here, which is now. So this line from the top to bottom is my measurement. You can go from the top of that, which is this line, roughly 50% higher. Let's say here, 50% of that, it's almost there, right? That's your ideal target. Did you see why I did that? This retrace back, the pullback, the 50% of it above the highest high is your target. I close it at the high, at the previous high. The market is down here. I take a trade down here. These 4, 5, 6 candles, it's like 22 pips. If I can get 15 pips, I'm out. I don't care market move 1,000 pips after this. What you can do is that you can enter again at this low here. Stochastic low here. You can get another one, and then both of these two trades here. One trade down there, the first high, low, second one low here. You ride this wave all the way to here or a little bit higher. These two give you, let's say, the high of this candle down here is 20 pips. The previous one is 28 pips. So overall 48 pips. If you can get 40 pips, 35 pips, or 30 pips, that's a lot of money. That's a lot of pips in like what? Let's say in 19 minutes, 20 minutes. Yeah, you waited maybe an hour, maybe 2 hours for this setup to form, but you got in 2 trades in less than 20 minutes. You took like 30, 40 pips, and then you're out, done. That's what you do in fractal trading. You start from the higher time frame, you determine the best spot, in an uptrend, in an up move, in a higher time frame. So you know that the market in a higher time frame is going up. Then you look for a buy position in the lower time frame. And as that famous quote is, that you buy the low and sell the high. Because you want to buy, the higher time frame is upward. We're looking for a low. The market goes up. You look for a low. Low is down here. You buy it. It goes up again. I'm out here. But if you want to wait, you can. This time you have 2 entries. Sometimes you don't. And then you go up. This is the target. I wait until the high. If it hits the high, I'm out. I put my target here. You can wait until it hits up top there. Sometimes we go to 100%, which is up there. Sometimes it doesn't. So the previous high is almost above 90% chance of hitting. That's why I always get out at this area. Now, about the stop loss. A stop loss, I put my stop loss based on price action. So the previous low before the entry is my stop loss, which is down here. But this area is a very big stop loss, and your reward to risk is going to be very low, less than 1. Probably is like 20%, 30% of your stop are going to be your target. So that's not good. So let's say if we have any other low, you see this high here and this low here. If you draw a line, this is going to be very good. This line here, it's a very good. Compared to this, it's almost like a less than 1 to 1, almost like a 1 to 1. The other one is up here. If I get this high as my stop loss, what do I get? If my entry is down here, this is the stop loss and this is the target. It's more than 1 to 1. If I enter the second one and down here, it's less than 1 to 1. So overall, let's say my reward to risk ratio is 1 to 1. So 1 is good. For me, it's good because my win rate is above 85%. But if your win rate is lower, you need like a 2 to 1 reward to risk, or maybe higher even. I'm okay with 1 to 1. If I can get 1 to 1, I'm all right. So that's this target, the previous high, your stop loss, the previous low, somewhere price action, high or low, maybe down here if you want to be more conservative. And then as soon as you get the trade, it's your target in less than 20 minutes and you're out. This is the basic of fractal price action analysis and trading. You start from the higher time frame, you move to the lower time frame, one by one by one. You pinpoint your entry, and as soon as you get this low, you enter and you're out. That's how you do it fast. I hope you enjoyed this analysis. You're gonna continue doing this for the rest of the week. You see, if I go up, I'm gonna go to the next day and the next day and the next day, and I find the previous day's entry and exits that I had to see if I did it right or wrong. This was the first day, Monday. In the next videos, I'm gonna go through the Tuesday and Wednesday and Thursday and Friday. So you keep watching the other ones. I'm gonna show you the exact trades that I took and the exact entry and exit point and the stop loss and targets. I hope you enjoyed it. I hope you learned something. If you have any questions, there's a comment section you can ask. If you liked the video, please hit the like button. If you haven't subscribed, please do. And if you have someone or you know someone who needs this information, please share it with them. Maybe it helps them. Thanks so much. Hope to see you in the next video.